Let me take this one. Just a minute. Now the scheme is visible to all of you.
Yes.
Okay, good. Yes, thanks to Digit, especially Rishabh for inviting me to present this on this topic, and also Vivek ji associated with me for quite some few sessions we have conducted together, and other delegates. Namaskar to all of you. Let us start the session. This is a new scheme. This is the agenda we want to go about. This is the agenda. First, I will go through the various schemes at present, what are there for export promotion that I will discuss. Then we'll discuss what are the taxes, duties, and various levies which are not being refunded at present. We'll discuss. Then I will shortly discuss about the MEIS also, because that is our basic at present good incentive scheme for exporters. But unfortunately or fortunately, it is going up because of various reasons. Those things we'll discuss. Then the new ROD-TEP scheme, that is what government is proposed. On that scheme, briefly we'll discuss, and its objectives will discuss, and what are the various salient features of this scheme also we'll discuss. And ultimately, of course, it is our onus as an exporters, we have to come out to provide the data. So this is like a wake up call to all of you. So let us say this exports, whenever we are making exports, this is a universal principle that taxes and duties or other levies should not be exported. Only export of goods and services, but not the taxes and other duties. So this is the universal principle. Based on this principle, Indian government also adopted, and on our exports and on goods and service exports, we have various schemes are there available to us for neutralizing these taxes and duties. Some of those schemes, what are those, we'll discuss. Currently, what is at present, those schemes are available which can be neutralizing the taxes and duties on exports. At present, for example, one is a MEIS scheme is there. There is an incentive scheme for the exporters. This is because of the to offset the infrastructural inefficiencies and its associated various costs. And this is a scheme wherein DGFT will issue to the exporters, the eligible exporters, the duty credit script, which can be used to offset the customs duty when any imports are made. Or if you don't want, we can transfer this script to somebody else on sale of it. So this is the scheme now available for the most of the exporters, but this scheme is now going off. Okay, those things we'll discuss later, but coming to the various export promotion schemes, we'll discuss. The next scheme is advance authorization schemes. In fact, it is a much very old scheme. Under this scheme, various inputs, what are the raw material, raw materials and consumables and packing materials, including fuels, etc., which has been consumed as inputs, are being allowed to import duty free. So this is an exemption, duty exemption. So this scheme is there for quite long years. This is allowed as per the SIAN norms, standard input and output norms. And that next another scheme is EPC scheme under Chapter 5 of the Foreign Trade Policy. Under this scheme, government is allowed to import capital goods or equipment and machineries for manufacture of export quality export products So this scheme, under this scheme, capital goods can be imported duty free. So the another scheme is duty drawback scheme, under which this is actually under the revenue department. Customs monitors and allows this scheme. Under the scheme, section 75 of the Customs Act 1962, under the scheme, the manufactured goods in India, if it is even exported out of India, then it is entitled, we are entitled, the exporters are entitled to get the drawback, duty drawback. As per the standard norms are there and brand rate also there, but standard norms is as per the AIR, all industry rate. Every year, the revenue department used to update it so that this scheme also available to neutralize the taxes and duties. These apart, we have many other schemes like EOU scheme under chapter 6 of the foreign trade policy, and similar to it under same this chapter, we have a STP, then EHTP and BTP. These also under the same like EOU scheme operates. Under the EOU scheme also, various inputs including capital goods are allowed to import duty free, and then SEZ, and it is a customs bonded enclave like foreign trade foreign area. And under this also, all the inputs, capital goods and various other services also been, those taxes are been exempted. Then FTWZ under this scheme means this import and export or trading. This is purely for trading purpose. Here also, what are the duties are there? Without payment of the duty, we can import. And if you want to export, again, we are without payment of the duty, we can export the goods. So similarly, various other schemes are there. Now recently they introduced the another scheme is a bonded manufacturing facility under section 58A and section 65 of the Customs Act. Under this also, we have been allowed to, it is like a trading come manufacturing, both are been allowed, and we can export outside in India. We can import, do some value additions like packing, repacking, some additions we can do it, manufacturing facility within the bonded warehouse, and then export goods. Here also the taxes and duties, whatever may be there, those are being neutralized for export. So these are the various schemes are there. This apart, under GST also, what are the taxes are there? Suppose we are procuring from the domestic market and using those inputs for the export production, and then we are exporting, then also the schemes are there under GST to give us the refund. So suppose we are an exporter, then exports under GST is treated as a zero rated, and we have two schemes are available. Under the one option is under section 16.3A and another is 16.3B. Under two these options, first option is we can export our goods without payment of tax under LUT, and the second option is we make the payment of IGST on our exports and get refunds. So in both the cases, because the export is treated as zero rated, the exporter, whatever he is getting the inputs on payment of GST, though GST is allowed to take ITC, and once he is allowed to take ITC, this ITC means input tax credit can be utilized for the first case, for example, without payment of tax. And in such case, if accumulated ITC is there, that accumulated ITC we can claim as a ITC refund. In the second option, because we are making the payment of IGST on our exports, then this the ITC can be adjusted towards payment of IGST, and whatever we pay the IGST, that is being refunded. So under these schemes, various schemes I told under foreign trade policy as well as GST, various taxes and duties being neutralized. So this is broadly about the schemes. This apart, we have a various other schemes are there, like a duty credit scripts. I come to make you understand. And under foreign trade policy, first is 2004 and 9. There was a scheme was there. These are incentive scheme. The target plus scheme TPS was there. And then in 2009 and 14, they introduced 5 schemes. There is a product focus product scheme, FPS, focus market scheme, FMS, then market linked focus product scheme, MLFPS, then agriculture infrastructure incentive scheme, then Vishesh Krishi Gram Udyog Yojana, then status holders incentive script. Like that, these scripts have been introduced. These are like incentivize the exporters. But in 2005, 2015 and 1920, 2015-20 scheme, that foreign trade policy, all these scripts have been merged into one single scheme called the MEIS scheme for the goods, and similarly for the services, we have SCIS scheme. So these two schemes are introduced, but MEIS scheme of late get into controversy. Then government gauging this controversy. What is the controversy? I'll tell you in the next slides. But because of certain issues in the WTO, now this scheme is going off. And it was known to government quite long years. And this apart from the MES, exporters are feeling there are certain areas are there where we are paying the taxes, duties, but those are not being refunded, even though we have many schemes. As I told you already, many schemes are there to neutralize the incidence of the taxes and duties, but there are still some taxes and duties are there which are not being refunded. So in 2016, one scheme was introduced, that is a remission of state levies, because that time many of the state levies, like for example VAT on fuels, etc., are been not nowhere been it is been given a refund or any rebate is there. Therefore, government is felt we have to do this scheme. The new scheme is introduced, and this scheme, of course, is limited to only garment industry and made-ups. Only these two sectors they introduced this one, the scheme, on a trial basis. Then they proposed to increase to all other sectors also, but that is not happened. But it is confined to only those garments and made-ups. And later, government thought after the introduction of the GST, many other areas also there which are not covered under GST, mainly for the fuels, for example, for the transportation, what are the fuels are being used, and various other aspects are there where various taxes and duties are not being covered under the other schemes, which I already talked to you. Those are embedded. So therefore, they thought we can expand the scheme. The ROSL scheme is expanded effective from the 2019 March. It is called remission of state and central taxes and levies. It's not confined to only state levies, but state plus central levies also being covered under the scheme. But unfortunately, this is still confined to only garment and made-up exports. So this scheme is may replace now, because this scheme is they plan to replace the MES scheme later. For garment industry, they did it, and they want now the next step is new scheme, because they want to convert this scheme into RODTEP. So this new scheme is being proposed, and eventually this scheme will be merged into this scheme, because this scheme is effective up to only 31st of December, and subsequently the government is planning to transfer this merge this scheme into this RODTEP scheme. So this is what is the scheme, and also this is not only replacing MES scheme, but it's beyond it. It is much broader in the sense. So all these things we will now going to discuss. Right? As I told you, the ROSL scheme was introduced in 2016, and then it has been renamed in 2019 into ROSCTL, including the state levies also. So that is expanded to this scheme, but it is confined to only garments and made up exports. At present, this is available for the garment, this apparel and made up goods up to these rates. These are the various rates for this scheme. And as we discussed, the MES scheme is going off. It isn't going to exit. It is a certain. What is the reason? I will tell you. Then what is the next also we discuss. This already government has given this notification, and already they have capped this MES facility not to exceed 2 crores per IEC, means per exporter, the IEC per number. So it will not exceed 2 crores, means large exporters are being already capped and they are affected. And again, they made overall that budget is only for 5,000 crores only. And beyond it, if anything happens, again, they will cap it. So this is how the scheme is going off. And already indication is given that the benefits under the MES scheme shall not be available for exports made with effect from 1st January 2021. That means the scheme is going off with effective from means after the 31st of December. Means the scheme is available up to 31st December only. But still, if you see, if you want to apply now, and this DGFT site is not allowing even now also from the exports effective from 1st of April 2020, what are mean exports are being made. For that also, even now it is not, the DGFT site is not allowing under the pretext that funds are not available. This is the we have opened, this is the message is showing. So it is not available now. Means very clear, the government is intention is very clear now to scrap it. Already restrictions are made. Now the scheme is benefits are not available even after 1st of April 2020. They're not giving, but later they may give. But up to that time, it is a loss of revenue, loss of working capital, and interest also. So the background why this MES scheme is going off is on 14th March 2018, USA has made a complaint with the WTO that some of the schemes of Indian government are tantamount to subsidy. So it is not as per the WTO norms, because WTO, as per the Article 3.1A and 3.2 of the SCM agreement, subsidies are not allowed. Only neutralization of taxes and duties are allowed, but no subsidies are allowed. Therefore, this MES scheme is treated as a subsidy. Therefore, this scheme is means objection is raised, and it was ratified, and ruling was made by the WTO that that they have given instructions to Government of India to scrap these schemes or withdraw these schemes. Of course, other schemes also there, but majorly the concern we are talking about is MES scheme. So MES scheme may go off. Then what is the next? That scheme is just to incentivize, but it is in the name of the infrastructure deficiencies or something like that named it, and they're incentivizing the exports. If that is going off, at present that is 2 to 5%. In some cases, it's up to 7% also allowed. So if that scheme is going off, then to that extent, our exports, that benefit is going off. That is almost like to some industry, this is the profit margin, and make us the competitive in the international market. The pricing also, when you take the MES factor also been made into pricing, means we are factoring this benefit into our pricing. Therefore, we are becoming competitive. But if this scheme is going off, then what is the next? How we will be competitive? Of course, we are apart from it, MES scheme is going off, but still those levies, various taxes and duties at the various levels of the value chain, we are incurring various types of taxes, but those are not being refunded or rebated at present. One side we are losing the MES benefit, other side this loss also continuing, that in the entire value chain various taxes, duties, levies which are we have been incurred, but those are not being refunded or rebated. Therefore this loss is still there. In addition, that benefit of MES is going off. So how our industry will be competitive, our exporters will be competitive in the international market? That is the question mark. Therefore, the government of India thought it is right time to introduce a new scheme. That new scheme they're talking about, this REDDP, means remission of duties or taxes on export products. RODTEP. This is being introduced. In fact, in the budget on the 1st of February 2020, when Honorable Finance Minister Nirmala Sitaramji was introduced this scheme in the budget itself. In the speech, she told that the new scheme of this year being introduced, it will be neutralizing the exporters various incidences of the taxes which are embedded in the entire value chain. Those taxes and duties will be reimbursed. So that is what the scheme was introduced, and subsequently a cabinet committee on economic affairs chaired by Honorable Prime Minister Narendra Modi ji also been cleared, approved this on 13th March 2020, and now it is in force. RODP is officially approved scheme now, but the rates are not been announced, because the rates for that they are calling from the industry the data. That is the process continuing. Therefore, though it is an approved scheme now by the economic committee and but this is not operationalized. When it will be operationalized is again a question mark, because it is in our hand only. Because once we give the data, government is ready from that, but data has to come from the industry. What are the various duties, taxes, and other levies are being incurred in the entire value chain, and that data has to be provided to the government, so that government will fix the rates. So this process is now going on, and some of the salient features also I'll tell you. Okay, these are the, as I told you, the announcement by the finance ministry on the 1st of February 2020. Then subsequently the cabinet committee on economic affairs is approved this scheme. Then a committee has been formed on July 30, and then now they are seeking the data for fixation of the rates. So this is the salient some of the features. This is the committee they formed. They had to interact with various ministries, and especially export promotion councils and commodity boards, trade bodies, and other associations, to collect the data, because this is central. Like they had to collect all the EPCs and the commodity boards. They had to collect the data from all the exporters and manufacturers, and compile the data and send to the committee for the fixation of the rates. Of course, the timelines, of course, is going off. No specific mention of the time or the date, but it's going off. In the circulars, some 2 weeks or so, it has been mentioned, but that is gone already. And now let us understand, because the data has to be collected from the industry, and the exporters has to understand, or manufacturers has to understand what type of data is required. And for that, let us deliberate. There's embedded taxes and levies. What are those? Little bit we'll discuss. Some tentative list is I'm presenting. but there may be many other levies or other taxes may be there in the entire value chain. What are those? Little bit, let us take on the state levies. The VAT and the fuel used in the transportation. Transportation is a very integral part of our business. Either is manufacturing or other trading also. This transportation is integral part of our business, and various stages inward and outward there are supplies are there. Therefore, there is a transportation is involved for the goods supplies, and transport is using the fuel, for example, the diesel, and on the diesel, this VAT is applicable because on diesel is not in the GST at present, though it is a GST, but rates are not been framed and it's not ratified. Till that time, it is out of the like GST. So the previous taxes and duties are still applicable, like excise duty and VAT is applicable on the fuels. So the transportation, the VAT on the fuel is there, that is not rebated or it is been neutralized anywhere in the transactions on any of the our schemes. At present, no scheme is being allowed to take this credit or making neutralizing this tax. Similarly, we have VAT on the fuel used in the generation of the captive power plants, and VAT fuel used on the farm sector. Farm sector, a lot of, for example, the tractors are being used, for example, the in the farm sector, and there the diesel been used. On that, VAT is means levied, that is taken as a cost, but rather there is no credit is available, and nowhere these type of credits are being allowed to refund or rebate. So these are being taken as a cost. And similarly, mandi tax, duty on electricity charges, then stamp duty on export documents, then SGST paid on the inputs such as the, for example, the pesticides and fertilizers, or many of the farm inputs, seeds and other things, on which the tax GST is applicable, and these have been paid, but farmers are not allowed to take because they're not registered, and they need not be registered also. Therefore, they're not allowed to take these taxes. Therefore, these become a cost to them. Similarly, various other taxes also, like suppose we have purchased from the unregistered dealers. Somewhere in this unregistered dealers businesses, he has paid the GST, but that is been taken as a cost, and that cost is passed on to the registered dealers also. When you purchase from unregistered dealers, that what are the taxes he has paid, but that is been taken as a cost, and that cost is now transferred to the dealers. So this is also one taxes where we are not taking anywhere that type of either input credit, tax credit, or anywhere exemption is available. Similarly, in the transport sector, various inputs are being used, like tractors, for example. This transport sector, the vehicle tires are there, or fuels are there, lubricants are there, many things are there, but they are paying the tax. But transporters are again not registered, therefore they're not able to take the input tax credit, but they means take this as a cost. All the taxes what have been paid, they are being observed as a cost to them. That cost is again passed on to the exporters. Similarly, central levies also, these are the some of the details of the central levies, a tentative list of these things. So all these taxes and levies which are been embedded in the entire value chain, but these taxes have been paid and taken as a cost by the exporters, but nowhere it is been refunded, nowhere it has been rebated also. So therefore, now the new scheme is introduced to give the relief to the exporters related to these incidences of the taxes and duties which are not being allowed at present under any of the scheme. So the objective of this new scheme is make Indian exporters cost competitive, to boost better employment opportunity, because once the exports are going and export-led manufacturing can happen, therefore a lot of employment generation also possible. And also the scheme they want to make as per the WTO guidelines, so that there will not be any dispute. Unlike like our various other schemes are shown to use various scripts, we have traditionally for so many decades we have the various types of schemes are there. Those are not, that's duty credit scripts, those are not WTO compatible, including of course the current one is MES scheme is not WTO compatible. So therefore the new scheme they want to introduce, which is WTO compatible, means as long as duties, taxes which are been levied in the entire value chain of the tax embedded in the value chain are allowed as per the WTO norms. But others what are the given is treated as a subsidy. Like MES scheme is treated as a subsidy, therefore it has to go off. Now, salient features of the scheme, briefly I tell you. Okay, already we have discussed. The scheme is, the intention is to give the refund of the various taxes, duties, and levies which are being incurred in the entire value chain, on which at present these are being not refunded or rebated. So for that, the scheme is allowed to refund it. Okay. And it has to be WTO compatible. And also they have proposed the scheme will be automated scheme, means electronically credit will be given through digital refund means to the exporters, it will be given. So that is what, there will not be any like MES scheme at present. You have to apply to the DGFT after your export and export realization. Then you have to submit to the application, submit to the DGFT, and DGFT takes its time. Then they will issue the script. Then after you can utilize the script. But this scheme they want to make automatic, so that there is no need for resubmissions and etc. So that a lot of bureaucratic and paperwork they want to reduce it. So automatic scheme, but the details of the schemes are not known. The details will be known only when that government announces the rates. Along with that, of course, that complete procedures they will announce. That time the details will be known. And that this new scheme, the ROD-TEP, that will be claimed as a percentage of FOB. At present, like MES also based on the FOB value. So similarly, this scheme also on the certain percentage they fix, some percentage of the FOB value they want to refund to you. So the question now, whether the new scheme which has been introduced, this scheme is comparable to MES rates or less than that. And most of the exporters and manufacturers, they have worked out and they're submitting to the various EPCs and other commodity boards. But their apprehension is, and the feedback also we got it, what we felt is they're not means comparable, the rates are not comparable with MES scheme, MES rates. MES rates starting 2% to up to 5%, and some cases, some of the exports it is 7% also. But when you work out this new scheme with myopic vision of confining to our own organization, within our own organization, the data if you collect, then you can collect the data from the supplier side, one side the suppliers, the other side what are the export you are making, in between what are the transportation, other details are there. Along with that, if you take the data, definitely the data comes to be much less than MES rates. Many of the cases people are coming, exporters are coming out with rates of 0.5% or less than 0.5%, or most of the cases it can be less than 1%, means much less than the MEIS scheme. So that the apprehension is there, then how it will be competitive? Because we are not taking the details, we are confining details from our accounting system only. We are not going beyond it. If you go beyond it, then it will be more beneficial. it may be many of the cases may come out to be more than MES rates. How it can be done? We should not confine to only suppliers, tier 1 suppliers, but we have to expand it beyond our supply chain, what we are confined to our own organization. Beyond it, we have to expand it. Then supplier 2, supplier means tier 2 suppliers and tier 3 suppliers, tier 4, then going to the originating point. Entire value chain you have to work out. We have to work out various incidences of the taxes, levies, either it's state levies or central levies. We have to identify, or some local levies like mandi tax. All these things we have to identify. Then, if you claim, then it may be better than the MES scheme. So this is where the industry is lacking. They're first thinking of this area only. Within their organization, the data is available with them. They're not going exploring the opportunity beyond it. The back end value chain, they're not working out. So this is where we have to now go about. For example, one example I tell, suppose you are an exporting unit. There's the inward transportation there, then there is an outward transportation there. Just I take an example. For the inward transportation, for example, VAT on fuel. On the transportation, fuel is being used, on that VAT is being paid, but that VAT is being observed as a cost by the transporters, and that cost is passed on to the exporters. And similarly, excise duty on the fuel, because again it is a central excise duty is previous regime. We have continuing on the fuels, petrol or this diesel. So this levy also, this tax also duty is being observed by the transporters and passed on to the exporters. So these are not being rebated or refunded anywhere in present schemes. Similarly, GST paid by the transporter on various inputs like lubricants, tires, then parts and services. Transportation required, transport vehicles require a lot of these things. On that, GST is being paid, but because the transporter is most of the cases is not registered, so these incidents of the taxes are being observed by him as a cost and passed on to the exporters. Similar logic we can extend to the outward transportation also. So these things now we have to explore. Therefore, this opportunity is there to get these things also refunded. Similarly, like for example, you're an export unit, and then electricity is one of the inputs. For example, on that, the duty is also been paid, electricity duty. Electricity duty, some states may collect up to 6%. Of course, it's the state subject. Various states have various type of duty structure. And some states like Telangana, it is a 6%. And this apart, suppose you have a means your own electricity generation through thermal generation, for example, thermal power plants are there. Then the compensation cess is paid on the coal being used in thermal generation of the electricity. On that, this cess is being paid, but that is not been compensated, or that is not been given any refund or a rebate by any of the present schemes. So that is also been observed as a cost, and that cost is passed on to the exporters. And similarly, GST paid on various inputs, including capital goods used in the generation of the electricity, that is also going into cost, and that cost is passed on to the exporters. One example I'll tell you, as a food industry, food processing industry I'm talking about. And food, talking about food industry, then they're the exporting, for example, food processed food is being exported. How that embedded taxes happen, one example I'll show you through this slide. And it's starting from the cultivation, the farmers at the end of the farmers, various inputs are there, they consume it, but those inputs on that, what are the taxes, duties are there, that is been not been given any rebate, are they not allowed to take input tax credit? Therefore, that is taken as a cost. Some of them examples I'll discuss. Supplies of the farm inputs like seeds, fertilizers, pesticides, then agro machinery, fuel used in the farm sector, and other farm inputs what have been used in the farmer by the farmers. They're not allowed to take any taxes input. Therefore, that is being taken as a cost to them. And similarly, there is inward transportation, outward transportation of the farm products. Then again, there is a market yard entry fees there. Then mandi tax is there. Middlemen are there. They are also adding the value to the prices. After that, it's been processed, various sorting or grading and many things. And there also a lot of incidents of the taxes are there on the machineries and the transportation, etc. And bagging and packing, on that inputs, for example, you are purchasing the HDFC bag or PP bags you are purchasing, on that GST is applicable, but that GST is nowhere been taken as an input or rebated. Therefore, that is taken as a cost. Similarly, various contractors are there. Then those been transported to cold storage, for example. In the cold storage also, again, there are various incidents of the taxes are there that is not been rebated. For example, the cold storage is being leased out, means that owner is leased to the somebody else, some cold storage operator. The lease agreement, when they made it, that on the lease there is a tax levy is there, and this GST is 18% is applicable, but that is nowhere been able to taken by the cold storage operator, because this has been exempted category. Though the taxes on inputs they have paid, like electricity also, electricity duty has been paid, and various cooling systems on that, various inputs have been taken on which the taxes and duties including GST has been paid, but those are not being allowed to taken by the cold storage operators, and they takes this as a cost, and that cost is further passed on to the this food processing unit. And there also various preservatives, then sugar, spice, and edible oils, and various colors and various other inputs are being consumed. On that GST is being paid, but that GST is been not taken. Many of the cases, what happen is there is a middlemen are there. For example, there is registered, unregistered people. Registered is okay, they can pay, but unregistered is there. Those things, it can't be taken as a this taxes and duties can't be taken as input. Credit is not allowed, so they had to pass on this as a cost. Similarly, on the packing and palletizing, energy, again this electricity on that duty is been paid. Fumigation or thermal treatments of the packing materials, also these all covers under these things, but there is no rebate or the refund of the incidents of the taxes which had been happening from the many of the unregistered players also there in the sector. Mainly, for example, the packing. For example, the packing, for example, corrugated boxes are there is a packing. That manufacturer, for example, is not registered, and he is supplying to the food processing unit. And those the corrugated manufacturer, corrugated box manufacturer, for example, he is purchasing the kraft paper. The kraft paper, when he is purchasing, he is paying the GST, but he's not a registered person. Therefore, he is not able to take the input tax credit. So he is observing that as a cost, and that cost is now passing on to the exporter. This is a processing unit. Processing unit is an exporting. Similarly, like various other instances also there, again in the transportation, inward and outward transportation also there. On that, as we already discussed, there is no rebate or refund of the taxes incurred in that fuel consumption, for example. Similarly, various instances in other factors also, like CHS. Some of the CHS may not be registered, but they observe many things as a cost, and that cost is being passed on to the exporters. So like this, many things are going into the export field. Like some example I've shown to you. Because of this, our exports are now because the cost is incurred and the taxes and duties what are being paid, but those are not refunded. Therefore, our exports are not very competitive in the international market. And this apart, MEIS is also going off. Then, unless we calculate all these possible opportunities and come out with our data, and unless we come out with this data, government unable to fix the rates. If that government is unable to fix the rate, then we are losing that opportunity, because MES anyhow going from the 31st December, that is certain. So for this fixation of the rates, the government is asking certain data in the three forms, that's R1, R2 and R3 forms, already notified. And these forms we have to fill up. The data required is from the 1st October 2019 to 31st March 2020. During this 6 months period, the data is required to be filled by the manufacturer or the manufacturer exporters. Okay. And of course, these merchant exporters are not allowed to furnish any of the details, because merchant exporters may not collect all these things, is not eligible. Only manufacturer or manufacturer exporters only allowed to provide this data. Also, EOUs and SEZ also not put into this category, because as shown in this one, this notification, as per this, only they're asking from the manufacturer and manufacturer exporters in domestic tariff area. They're very clearly mentioned. Therefore, these SEZ and EOUs are not into the domestic tariff area. Therefore, they're not covered under this scheme. I mean, so in this scheme is covered, but not under the provision of the data. They need not submit the data. Merchant exporters, of course, once the rate is fixed, the merchant exporters are become eligible to get this benefit. But data need not be submitted. But once the rates have been fixed, they also become eligible for this scheme. And as I told you, three forms are there: R1, R2, R3. Only from this period, that 6 months period, you have to submit the data. And for each of the product you have to submit. That is the biggest challenge here is, for each of the product at 8-digit HSN code, you have to submit the data. Again, for each of the product, at least 5 units has to submit the data. Means for each product, 5 units. So that is again a biggest challenge for the industry. And most of the Export Promotion Council, we are interacting, and the data is not coming from the industry side. Though some people are claiming that we have received 20, 30 or 40 like that, but each product 5 they're not getting. For each product maybe 1 or 2 like that getting. That is not sufficient to fix the rates, because for fixation of the rates, at least 5 companies or units has to come forward for each of the product and submit the data for this 6 months period. So what this data is covered under this 3 forms. First one is R1, this form. Under the R1 form, it is of course very easy, because the data whatever required is within your company, it is within your accounts. It is all data is available, because only for the last 6 months period, 1st October to October 2019 to 31st March 2020, this particular 6 months period, the data of exports what they made on FOB value they have to submit, and little bit that 8-digit level, of course, they have to submit the data. The data is FOB value, and the quantity also they have to submit. So this is all data is available within the organization. So this is not an issue at all. And most of the people are ready to submit this data. Coming to the next one, it is little bit difficulty level increases, because it's extended beyond our own organization to transporters. What are the we have transporters, we have paid the bills and other thing. the transporter, what he has incurred the fuel, that has to be calculated. And on that, what is the VAT and what is the excise duty, we have to work out. Similarly, like electricity, what you have consumed, on that duty has to be worked out. And the documentation, export documentation on which anything as stamp duty is paid, on that you have to work out. So little bit difficulty level it is increasing. This apart, on the transport sector, means the transporter, what he has used as an input, various inputs he must have used, like I told you, lubricants, maybe his tires, or the services where he has paid the excess, the service tax, the GST of the services, he has paid 18%, for example. So those are all covered under this. So this is the R2 form, and then R3 form also much difficult. This is the real challenge, is comes under the R3 form. Here they're not talking about your own inputs and output, but you have to dig down the entire value chain from the origin of these inputs, and then entire value chain, what are the incidents of the taxes, duties, you have to work out. That is what the prior stage cumulative taxes, all these things you have to work out. Then only your taxes, the rate will be much attractive. Maybe in cases, most of the cases, it goes beyond the MEI scheme at the rates. So this is where the industry is lacking. Mainly the food industry, agricultural industry, and they will be benefited much more than any other industry, because there the instance of various type of levies, taxes are there, as I already explained to you. Those are not being covered under any of the refund scheme or rebate schemes. So this is the biggest opportunity for industry. So we have to collect the data on each of the product at 8-digit HSN code, and at least 5 units has to submit for each of the product. This is the big challenge, but of course there is a benefit. Therefore, you have to take this challenge and prove and get benefited. Of course, the units, those who have been submitted, that is subject to verification also by the DGFT. And of course, it is government is ready to provide that rates, but is from our side we have to come forward. And to start with, recently government is announced that they are ready with these 3 product sectors. One is the ready-made garments and made-ups, because already there is a previous that scheme is there, ROSCTL, that scheme is there. That scheme they want to convert into ROD-TEP scheme. So they're ready with this already. And automobiles and auto parts, there also government is going to announce. And iron and steel also one of the product. These are the 3 sectors for which the cap also they mentioned 10,000 crores they're allocating for these 3 of the sectors to start with, because other sectors also government is ready, but the data is not coming through. So it is onus is now on the industry side, means exporters and manufacturer exporters, to submit the data. Of course, the onus is also on the export promotion schemes, because we are talking about many of the schemes they are promoting. But if you lose the benefit of the MEIS and other losses which are incurred as a incidence of the embedded taxes, and that onus is now on the export promotion councils and commodity boards also come together, get motivate the exporters, because that awareness is not there. Practically I'm talking about, because we are interacting with many of the exporters and associations and etc, plus EPCs also. But what we understood is that awareness is not come forward, and also they're finding it difficult to compile the data, because enter the value chain they had to the taxes, duties, what have been incidences happened in the entire value chain, they have to work out, which is not that data is available readily with them, or they're not able to compile those details, because it is a very Herculean task. It's very difficult task. So that is where they're stuck up. And of course, this wake up call, like we are promoting many of the programs we are conducted through together, or we are 3, Rishabh ji and Vivek ji and myself, We have conducted many programs. So this is also one program. With this, I want to end this program. Anytime you want to contact, of course, either of us, you can contact. So with this, thanks a lot. Thanks to everybody patiently listening. Thanks. Now I will request Vivek ji to tell about because he is a very experienced person.
Thank you, Mr.
Last
Panigrahi.
30 years he has there in this field, and his specialization is interaction with the government officials for fixation of the drawback and many other So he's we are lucky enough that we are all able to hear to him now. Sir Vivek ji, now this is you to you, sir. I'm now stopping this presentation.
Just one second.
Yes.
Rishabh bhai, you continue, please.
So I think the most important part which Panigrahi did is that grouping while filing your reports, which means if you have to deal with every HSN, single HSN for single R1, R2, R3 form, then you have to make a group so that the variations, the aberrations can be controlled. So in the past, Vivek ji, me, Panigrahi ji, we have done this for a lot of export promotion councils. We have done this for exporters, and the best strategy is to create the group so that you can justify the number crunching as well as the completeness and correctness of R1, R2, R3 format. As he said that these questioning, so all the assumptions, presumptions, and the supporting document need to be prepared, need to be kept, retained for a couple of years so that any query which comes later on can be addressed. So I will request now Vivek ji to just give share his experience in terms of dealing with the process of determining the rate, like how these rates are going to be determined in the future, because
Thank you, Rishabh. So I think Panigrahi ji has already described in detail. I will keep it very, very brief. And primarily the main difference which has come now is that, the traditional export incentive planning, fixing, everything has been done traditionally by Director General Foreign Trade under the Ministry of Commerce. But this is the first time that the Department of Revenue has taken the effort to, collect the data by themselves and allocate the rates. And traditionally, the department which has been entrusted under the committee which has been formed, a 3-member committee. So this department has been traditionally fixing the all industry rates. So they have a lot of exposure to all the industry products and they have been dealing. So accordingly, this is something which is there on the shoulders of a department which is not so well equipped, I think resource wise or manpower wise. So it is going to be a challenge, and we are also awaiting the announcement of first rates. As Mr. Panigrahi ji said, that some of the sectors have already given the data and government is supposed to come out. So I think only after that we may be able to say something more concrete as to how the government is reacting. And regarding the cost part of it, I think it would have been better if the government itself would have taken care of, indicative cost in the transport, because after all, transport diesel cost per kilometer per ton is going to be same for everybody. So to keep things simplified, they could have asked only the kilometer tonnage from every exporter for the inputs and outputs. and also the transport is there by railway as well as water. So railway is also a substantial transport, especially on the export side. So again, railway data for costing, I don't think it is available with any exporter. So that part is again left on the government. And similarly, electricity, there is only duty element which is there in the bill, but the energy charges which are there, it is very difficult for an exporter to arrive at a cost part doing a back calculation. So I think it becomes the role of the export promotion councils to impress upon the government that some of these data are available with various government agencies or various agencies which are outside the purview of the exporter. So government should provide some of these data for the exporters to take care in their calculation. So we will see how things come out. That's all. Please, Rishabh, I forward it to you and I'm available for any questions or any issue that somebody may have in mind. Thank you.
Rishabh ji.
I think Rishabh is trying to connect back.
Okay.
Meanwhile, if I may ask that since we have Miss Annie D'Souza amongst us who is representing Export Promotion Council, what has been your experience, Annie, in determining the cost of these products and how has been the overall experience so far?
Hello.
Yeah, please go on.
Yeah. We had faced difficulties in getting the data from our exporters, but then we managed to complete the task.
That is very good. That is very good. So did you help them in any calculation part or arranging all these data cost inputs, or they managed on their own?
They managed on their own.
Okay. Rishabh, please go on.
Thank you.
Thank you. Thank you, Annie.
Thank you.
Rishabh ji.
Thank you. So I think Akshay ji, you are you are dealing with the food processing exporters, and Amit, you are dealing with the handicraft exporters. So I think there are a lot of exporter categories who are right now may not be aware of these provisions. So I think as an advisor, we need to work with export promotion councils to basically bring them up to speed, because of course the process, the timeline has gone, but there are opportunities still available, because the government is going to go in phases. Then still time is there to basically get the right data. Of course it is going to be challenging, but I would suggest that if the promotion councils can be supported by grouping, we can definitely get this process fast forward, and we can expedite the process with correct data compiled. Abhishek Saraugi, I think, is there. Abhishek, since CBS is also working with exporters, particularly the agri commodities, so you can also look at this RODTP scheme as an opportunity to tell to your exporter that, look, please come forward, file the data and file the right data, so that it is in their benefit, it is in their interest.
Sure, Rishabh.
Any question you have, Mohit, Amit, Abhishek ji, Akshay?
No, we have no question to ask as such. काफी इजी लैंग्वेज में अच्छे से समझ में आ तो गया है ब्रॉड लेवल पे, बट डेविल लाइज इन द डिटेल्स. थोड़ा सा और जब डिटेल में कुछ किसी के लिए काम करेंगे तो कुछ होगा तो समझ में आएगा कि और क्या है. बट नो क्वेश्चंस एज ऑफ नाउ.
And the one thing I want to inquire from the Annie D'Souza, because she must have collected a lot of information from the exporters. Already she was telling. But let us understand whether they have filed all the R1, R2, R3, and roughly can tell what range of rates they arrived at. Madam?
Hello.
Madam, what is the range of rates they arrived at? Because whether they filled up all the details in R1, R2, R3 also, and roughly what range of the rates they arrived at? Can you express little bit?
Like the date R1 was completely filled up by the exporters.
Yeah.
Then R2 and R3, like some details were missing. But like whatever data we could get from them, we have provided to the government. And regarding the rates, so we cannot part the data. I'm sorry.
Okay, that's okay. But
Yeah.
we're not talking because where the crux of the issues there only available. Of course, most of the people, most of the exporters or manufacturers easily can provide the data which is in the form of R1. But R2, the difficult level increases. R3 is
Yeah.
very difficult level, but most
Yes.
of them, without completing this all the data, they are submitting. As a result, what will happen is if they come out with a rate of say 0.5% or less than 1%, if they are satisfied, that is the crux of the issue actually. Actually, why this awareness we are talking about is that is the crux, because most of the people covering R1, it's okay. R2 and R3, they're not able to completely file that details. As a result, they not arrive at a good range of rates. And most of the people now, that is the complaint is they're arriving at much less than MES rates at present, what is available to them. So that is why I asked it. Okay, that's fine, madam.
So there is a common misconception amongst the chartered accountant or cost accountant who are supposed to certify that the data should match with the financial of the exporter. But that is not the case, because R2 R3 data is not it's outside the ERP of the exporter. It is basically the value chain with which exporter is dealing. For example, if they are procuring their own vendors, the vendor's vendor, and also up to the farmer level. So that data will not be there in the ERP of the exporter. So that data has to be carved out from the value chain. So that is where the whole question comes. And mostly we have seen that the R3 is left blank, and the chartered accountant certify only up to R2, and R3 they don't give much data. So that is not correct, because the intention of the government is to capture the unrebated duties and taxes in the entire value chain, rather than looking at the immediate value chain of the exporter. Thank you very much for joining this session, and I hope it was beneficial to you, and you will talk to your exporters after Diwali, and so that you can help them in making their life much more prosper, because this incentive is just a direct addition to their profits, because anything comes is straightforward addition into their profit. So we should not export the taxes from our country, and we should try our best to figure out all the unrebated hidden taxes in the value system and give it to the government, so that next 5 years we can get the good rates. Thank you.
Thank you, Rishabh. Thank you.
Thank you.
Thank you, Vivek ji. Thank
Yeah.
you.
Thank you.
And thank you. Any help,
Yeah,
please,
thank
we are there. We can,
Yes, sir. Thank you. Yeah.
Bye-bye.
Yeah. Bye. Good night.
Thank you. Bye-bye.
Bye. Thank you.
Wish you all very happy Diwali. Stay safe,
Yeah.
stay healthy.
Same to you.
Happy Deepavali. Thank you. Thank
Happy
you.
Diwali.